Hello everyone and welcome to Aurilla Crypto Land. If you're new here, we explain all the candle patterns and trading tips and strategies in our channel. In this video, I'm going to explain all the single candle patterns. If you're a beginner, you need every second of this video, and if you're a pro trader, stay because I'm going to explain some key points about each candle that will improve your trading strategies for sure. So if you're new, subscribe to my channel for more videos, and if you're already a subscriber, welcome back. First of all, we have the hanging man candle pattern. This pattern usually occurs in an uptrend. When this hanging man pattern is seen, it's a warning for the end of an uptrend and a change in direction from bullish to bearish. This pattern rarely occurs, but if this pattern appears in the chart, it will be a powerful sign of the trend change and may have a bullish green body or a bearish red body. The candle is composed of a small red body, a long lower shadow, and a little or no upper shadow. The hanging man shows that selling interest is starting to increase. In order for the pattern to be valid, the candle following the hanging man must see the price of the asset decline. Before moving to a real chart example for this pattern, here are some key takeaways to keep in mind. A hanging man is a bearish reversal candlestick pattern that occurs after a price advance. The advance can be small or large, but should be composed of at least a few price bars moving higher overall. The candle must have a small real body and a long lower shadow that is at least twice the size as the real body. There is little or no upper shadow for this pattern. The close of the hanging man can be above or below open. It just needs to be near the open so the real body is small. The long lower shadow of the hanging man shows that sellers were able to take control for part of the trading period. The hanging man pattern is just a warning. The price must move lower in the next candle in order for the hanging man to be a valid reversal pattern. This is called confirmation. Traders typically exit long trades or enter short trades during or after the confirmation candle, but not before. Okay, let's move on to an example chart. As you see, here an uptrend happened and closed with a hanging man. This next bearish pattern is like a confirmation to the power of hanging man pattern in closing uptrend and opening downtrend. At the end of an uptrend with forming hanging man, a powerful downtrend happened. In this chart, we'll see how the hanging man pattern is affecting the trend. Here, we are in a downtrend, and an uptrend is happening. Okay. Here, as you see, after an uptrend, a hanging man pattern with a long lower shadow and a short upper shadow is formed. Next candle is a negative candle and closed negatively as a confirmation candle of this hanging man pattern, and the trend has changed direction from bullish to bearish. See how powerfully the bullish trend turned into a bearish trend. But the key point is here. Hanging man formed during this process, but the confirmation candle didn't appear here. And a negative candle should have formed, but it didn't. So this pattern was not confirmed and was failed. Here is another chart. We can see a downtrend, and an uptrend is forming here. An uptrend is closing with hanging man with long lower shadow, and a bearish confirmation candle comes after hanging man. In the following, we can see that a sharp downtrend has occurred here. Decline rate of this pattern as close to 30%. Next, we have the hammer. If this pattern appears in the ceiling, it's known as the hanging man pattern. And if it appears on the floor, it's known as the hammer. The hammer is a bullish reversal candlestick pattern that's formed when the price of a security opens in the low, falls to a lower low, and then rallies back up to close near the open. This pattern can be red, which means it's a bearish, or it can be also green and bullish. In green color, and when there's an ascending candlestick, it will increase the probability of the reversal of the trend. The hammer has a long lower back and a small body, which the shadow is usually 2 to 3 times its body. And the longer this shadow is, the more valid the pattern will be. Long shadow indicates that there was a lot of selling pressure at first, but that the buyers were able to overcome that pressure and close the candle near the open. The hammer is a relatively rare pattern, but it is often seen at the end of a downtrend, and when it appears, it's a sign that the bears may be losing control of the market and that the bulls may be about to take over. Before moving to real chart examples, here are some additional things to keep in mind when trading the hammer. The hammer is more reliable when it is found on higher time frames such as daily or weekly charts. The hammer is more likely to be successful if it's preceded by a strong downtrend. And the hammer is more likely to be successful if it's accompanied by other bullish indicators such as rising volume or a bullish engulfing pattern. Let's see some example charts to better understand the pattern. We observe this chart together, which you can see that a hammer pattern with a very long shadow has formed here, and a very strong confirmation candle has formed here, which has followed an uptrend. Also, at the end of this downtrend, a hammer pattern has formed, which is shown here with a shadow almost twice the size of the body. The confirmation candle is a bullish candle that's closed above the body of the hammer candlestick, and a very good bullish trend has formed. In the next chart, it can be seen that a hammer pattern has appeared here again, and the confirmation candle is an ascending candle. And the person who enters the trade here opens his position in the third candle and experiences an uptrend here. Also, a hammer candle can be seen here, and the second and third candles are bullish candles and form an uptrend. In the next chart, we'll see that the candle here, a hammer candle, again, a hammer candle, and a confirmation candle, and a very strong upward movement has formed here. Also, here we see that a hammer candlestick and a bullish confirmation candle and a good uptrend have been formed. And here a hammer pattern and a confirmation candle and a good uptrend. In the next chart, we'll see together a hammer candle and a confirmation candle are fully formed, and there's an excellent uptrend ahead. Remember that the hammer is a powerful reversal pattern, but it's important that it's not a guarantee of a trend reversal. And it's always a good idea to use other technical indicators to confirm the reversal before you place a trade. And then here we have the inverted hammer pattern and the shooting star. An inverted hammer is a bullish candlestick pattern that forms after a downtrend. It has a small body and a long lower wick, with the close near the high of the candle. This pattern indicates that buying pressure is starting to build and that the downtrend may be coming to an end. This pattern is a bullish reversal single candlestick pattern that forms at the end of a downtrend, as I said, and it indicates the possibility of a trend reversal from a downtrend to an uptrend. This pattern has a small green and ascending body or red and descending body, and it doesn't matter what color the candle is, but since an uptrend is formed at the beginning, if it's green, it will be somewhat more powerful. This pattern usually has a long shadow that's almost 3 times the length of the candle body. This candle is either without a shadow or only consists of a strong body, or it has a small shadow. And as I said, this pattern is formed at the end of a trend. And for better understanding, let's see an example chart together. Here, I see an inverted hammer pattern is formed and a very high gap is created between the confirmation candle and the inverted hammer candle, which forms a powerful inverted hammer pattern here. If there is a gap between the candle before and after the inverted hammer, if this candle is placed lower, this pattern will be much more powerful pattern, and the probability of trend reversal will be much higher. Here, as you can see, a downtrend has formed at the end of the trend. An inverted hammer candlestick and then a bullish confirmation candle followed by a strong uptrend. Okay, in the next chart, you'll see that at the end of a downtrend, an inverted hammer pattern has appeared. And you'll see a confirmation candle or a green candle which is formed with a gap between the inverted hammer and the confirmation candle. And a very small gap has been created between the candle before the inverted hammer pattern, which will indicate a strong bullish pattern, and you can see that the bearish trend has become a very strong bullish trend. And next chart, we want to see how a bearish trend with an inverted hammer single candle pattern will turn into a bullish trend. And here we have the inverted hammer candlestick pattern, which changes this powerful downtrend to a powerful uptrend with the confirmation candle of this inverted hammer pattern. Okay, let's move on to the shooting star pattern. The shooting star pattern, like the inverted hammer pattern, has a small body with a green and ascending color or red and descending color, and a very long shadow that is almost 2 to 3 times the size of the body. This pattern is a bearish reversal pattern and is formed in an uptrend, which will actually represent the change of a trend from uptrend to a downtrend. This pattern is exactly like the inverted hammer, But the difference between these two is that the inverted hammer is formed in a downtrend, and it changed the trend from downtrend to uptrend. But the shooting star pattern is formed in an uptrend and changed the uptrend to downtrend. And when the uptrend reaches its ceiling, a shooting star pattern appears, which will indicate a trend change from uptrend to downtrend. Here is an ideal shooting star pattern with a gap between the candle before and the candle after it. This pattern is a great idea pattern that is formed in an uptrend and appears at the ceiling of the pattern, and with a bearish candle and a gap to the shooting star candle. Here the pattern is confirmed, and with a very high probability, the uptrend becomes downtrend. In this part, you can see that an uptrend has formed. At the end of the uptrend, the shooting star appears and the second candle appears with a gap compared to its previous candle, the shooting star candle, and this also represents a confirmation of the change in a trend from up to downtrend, and it's descending. So wherever you see shooting star, it's a sign of changing trend from up to downtrend. If this pattern formed with a gap, it will be a more powerful pattern, but this will not always be true, and it's possible that this gap will not be created, but the pattern will still be valid and powerful. First, in this uptrend, you see shooting star candle with a very long shadow and a small body, and the confirmation candle of a very powerful bearish candle, almost below the body of a shooting star candle. And as you can see, an uptrend has become a downtrend. And this downtrend is very strong. And the next chart and next pattern, a very strong uptrend has formed, and at the end of this uptrend, we see a shooting star pattern and even two shooting star pattern, which change the trend from up to downtrend. Here are some more chart examples, which I'm not gonna explain. You can pause the video or just continue playing and try to identify the shooting star candlestick patterns for yourself. And if you have any questions, you can comment below. So let's move on and try to guess where is the shooting star candle. Then here we have the belt hold candle pattern. This pattern is a reversal pattern that occurs at the end of a trend, both bullish and bearish. And it's less common in charts, but when it appears, we can expect a powerful reversal. This pattern has a distinctive appearance, usually with little or no lower shadow or lower break. The larger the body of this pattern, the stronger its validity. Typically, this pattern opens with a gap compared to the preceding candle, but the continuation of this gap must be filled. The conditions for the appearance and validity of this pattern requires at least 4 opposite candles in the previous trend. We say that this pattern is formed in downtrend. In this downtrend, we see that first an uptrend is formed. Then a candle against this trend appears, which is open with a good gap. There's no upper shadow here and a very large body has formed, which doubles the validity of the pattern, and here we see that the downtrend has formed. For example, the bullish belt hold may open below a previous swing low and close back above that point to form a potential double bottom. The bullish bell hold should be a long white or green candle to indicate that the bulls have taken back control. Ideally, the candle preceding the pattern should be accompanied by above average volume to indicate climatic selling and a possible reversal to the upside. On occasions, the bullish bell hold can be a mere pause in the overall downtrend. Therefore, it's prudent that traders wait for the price to confirm the pattern. An entry should only be taken when the price trades above the high of the belt hold candle. But it's important to consider that the bullish belt hold candle is not considered very reliable, as it's often incorrect in predicting future share price. For more explanation, let's see some chart examples together. Here we see that at the bottom of this downtrend, a powerful candle opposing the trend forms, accompanied by a smooth bottom and a body that fills the gap leading to an uptrend here. To enter a trade, it's necessary to have a confirming candle after the main belt hold candle, and in the next candle's closing, we can enter a buy trade. Similarly, in the continuation of this chart, at the bottom of this chart, we notice a bullish trend where a belt hold candle forms, filling the gap and leading to subsequent downtrend. Likewise, in a downtrend, we can enter a short trade when a candle forms in the closing of the belt hold candle. In the next chart, we'll explore how this pattern forms. In a long-term or strong downtrend, we see a candle appearing here, filling the gap and leading to an uptrend. In the next chart, we can also observe an uptrend in the process of formation. Continuing with this uptrend, we see a red candle opposing the trend with a significant bullish gap. It fills the gap related to the body of the preceding candle and subsequently forms a downtrend. If you enjoyed and learned something from this video, give it a thumbs up and subscribe to my channel for next videos about double candle pattern series.